Alrighty, guys, welcome back to World Class Voices. We've got something very special for you this week, actually. We're going to be taking a slight intermission from our guests. We've got some incredible icons lined up. I absolutely cannot wait to share with you the next few weeks. It's going to be super duper cool. We've got some super cool names. We've got business people. We've also got some athletes and some women that we're going to be involving as well. So it's an incredible time, and I can't wait to share all of our next icons. But we're going to be taking a really quick intermission this week. I thought after two incredible episodes with both Andrew and Glenn, it was the perfect timing for me to just take a quick break and share with you guys a few interesting things. So, what this afternoon is going to look like is it's going to be a little bit more casual. As you can probably see the way I'm dressed, I'm a bit more casual today. I've got my notes here, so I'm going to be looking back and forth with my notes. And you're going to have to forgive me. I've had an absolutely massive day. And I'm just getting to this now, so I am going to be referring to the notes a fair bit, but I've prepped these and there's some absolute bangers in here. So as anyone who's been following my journey knows, and for anyone who, is coming to meet me for the first time, I've been fortunate to spend a lot of time with some incredible people. In all the businesses I've been involved in, I've had, incredible investors with most of them. I've always had great mentors, and fortunately over the last few months, I've had the opportunity to sit down with billionaires and ultra high net worth individuals. And, it's not all about money, but when you sit down with billionaires, they're like the business equivalent of world champion athletes and world champion record holders in the Olympics. Money is the metric on the scoreboard in the sport of business. That's the way I look at it. So when I refer today about high net worths, ultra high net worths, billionaires, not everything in life is about becoming a billionaire. However, billions of dollars and hundreds of millions of dollars are the metric that we measure success in business. So guys, we've got so much to go through today. I've actually collated my 6 biggest lessons from billionaires. I've also included some practical and immediately implementable tips of my own that I, again, have collated through spending time with incredibly successful business people and high achievers over the years. So I'll read you through a few headlines and then we're going to go through each one of them individually. So lessons I've learned from billionaires. So first of all, what is the one single thing that all billionaires are passionate about? That's going to be a really cool one. The biggest shift that's happened for me since spending time with billionaires, we're going to go through the primary differences of business in the 20th century versus now in the 21st century. That's going to be fascinating. In every opportunity, there is a micro and a macro element. This is one thing that I've learned from successful business people. They always look at the micro and the macro, not just the micro that most people look at. The most important thing that stops you falling flat on your face once you become wealthy. This is a fascinating one. The cool thing about spending time with people that are ahead of you in the journey is you can almost figure out what they did wrong and figure out what they did right to prevent something wrong happening. And then you can actually learn their lesson without actually having to go through some of the hardship. Very, very fascinating. And finally, how I see billionaires and ultra net worth keep their family intact. Now, this is a really big one. This is an incredibly important one. And it comes back to what I was saying before about how, money isn't everything and business isn't everything. You've got to look at your life holistically. Now, us as business people choose to play the sport of business, just like how footballers choose to play the sport of football. But their whole life isn't football. They've got a family at home. They've got all the other parts of their life. They've got their friends. They've got other responsibilities as well. So there's going to be an element here that looks at life holistically as well from the lessons of billionaires. Very, very fascinating. Cool. Practical tips and lessons, how to stay focused and not get distracted with too much whilst in hypergrowth mode. We're going to go through my approach of deciding what's the best kind of course of action when you're young or at the beginning of your journey. We've got a mental ritual of mine to keep your vision and belief clear. 3 questions I ask myself when I'm feeling uninspired, my thesis for life, and also my personal investment hierarchy. So there's 6 incredible lessons from billionaires. There's 6 immediately implementable strategies that I've learned over the years from high net worth successful people. I'm really keen to get into it. Alrighty, let's get into number 1. Cool. Lesson number 1 is, what is the one thing that all billionaires are passionate about? Now you must be thinking, how can all billionaires be passionate about one thing? Passion's a very interesting conversation. I love the conversation. It's quite I often have a bit of a debate with people because in this current age, it's so popular to be passionate about your business or your product or your service. The one thing that all billionaires or ultra high net worth individuals are passionate about is they're passionate about winning and achieving. It's the thing that gets them out of bed in the morning is winning and achieving. Not many ultra high net worths and ultra successful people are genuinely passionate about what they sell or what they deliver. They're just not. One of the biggest problems I see and what I've learnt in the market right now is younger people specifically and more beginner entrepreneurs pursuing ideas that they're passionate about in the absence of commercial viability. It's a huge problem. I actually have the unpopular belief, and I'm happy to debate this with anyone, that you shouldn't sell something that you're passionate about. The problem with selling something that you're passionate about is when you're passionate about something, you view that business through like cellophane eyes. It's almost like you have a mufti outlook because you're biased. It's kind of like if you've ever been, when you were young and you had your first love and you're in lust with someone, you kind of, your mind creates them as what you want them to be. You're not actually looking at them objectively and looking at who they are objectively. It's the same with business. If you're passionate about something, you want it to work. You want that business to work. And so you can kind of turn a blind eye to some of the red flags and some of the problems. Whereas if you're objectively looking at that business and you're selling steel, right? You're buying steel from China and you're selling it, you're holding it in stock and you're selling it to builders in Australia. Not many people are passionate about steel. Not many people are passionate about import, export, manufacturing. But if that business makes money, you're going to be looking at that entire business very objectively, because if it's not working, if it's not making money, you're going to get out of that space as quickly as possible because it's ultimately boring. The next question to this is, okay, well, if you're in an industry which you're not passionate about, how do you get out of bed every morning? And how do you keep going? When things get hard, how do you drive forward? Well, what I've realized these billionaires and these successful people do is they're not passionate about the product. They're passionate about winning. They're passionate about competing and they're passionate about achieving. So what they do is they go, hang on, I'm in this industry. I want to kick goals. I want to increase my points on the scoreboard. Those points are measured in the metric of money. And that's what they focus on. They focus on out-competing their competitors. They focus on winning. The feeling they get when they have a brilliant day and their output is high and therefore on average their outcome is going to be high as well. That's what they're playing the game for. Sometimes there are exceptions. And what I often say is if someone goes, look, my business is successful, Sam, and I'm passionate about it. And I go, well, congratulations, well done. You should be grateful because that's inordinary and it's brilliant. So there are exceptions. Sometimes the worlds collide. And if that's the case, brilliant. But all I kind of say is, don't let passion blindside you to commercial viability because that's when businesses go down and it can be incredibly embarrassing. And also make sure that, again, if you're looking at a business and you're passionate about it, make sure that you're going to be blindsided. You're going to have tunnel vision. You're going to want it to work, but make sure you know how to objectively look at the entire business holistically. That is such a big takeaway I've had. Now, I almost don't spend any time on the areas of life that I'm passionate about. The other problem that you can have is you can go into business in an area that you're passionate about, and then you can hate that space. And if it's a hobby for you, you might then go, okay, I don't even like this hobby anymore. It's really important to distinguish hobby businesses as well from commercial businesses. This is very, very true for kind of businesses with more of a charitable component to them as well. If you're kind of looking at running a side business for more of a philanthropic reason, that's fine. And you might love what that business does to people. It might be serving a customer in an incredible way. But just know that that's a hobby business. It's not a commercial business. And it's fine to run hobby businesses. It's probably not fine to run hobby businesses if you're broke or if you're starting out or if you've got a family to provide for. But if you're at a point in business where you can actually afford to do that, then brilliant. The other component to this, which really proves the point, is, two of the billionaires that I've spent time with recently, they're both in their 80s, and both of them get up out of bed in the morning. They've got their tie on. They're in the office by 9 a.m. in their 80s. And if you're worth billions of dollars, making an extra couple hundred million before you die is not gonna be needle moving for your life. It's not going to change the game in any way. And so the point here is, the reason they get up out of bed every morning and the reason they're still mentally sharp, if you speak to them on the phone, when you're looking at someone visually and they're older, the way they look comes into the way your mind thinks. But if you're speaking to them on the phone, you can't see them visually. Some of these guys talk better than, other gentlemen that I know who are in their 50s. And so they're awfully mentally astute. And they love what they do. And the reason is because they love achieving. And that's why they get out of bed every morning, because it's not going to be needle moving for their life. And that's because they love achieving. It's not because they love the product or the service that they sell. Alrighty, that's number 2. This has been the biggest shift that's happened for me personally after hanging out with these incredibly successful people. So when you spend time with a billionaire, the word billion is a very big number. When you spend time with these guys, what happens is your whole outlook on the world changes. You actually realize what you're capable of, and you realize that things are bigger. There's bigger games. There's literally levels to the game. I had a conversation with Jack Cowan. Jack founded, or he brought Hungry Jack's to Australia. So obviously in the US you've got Burger King. He brought Hungry Jack's to Australia and did the master franchise deal with Burger King. A funny story to that one is the Burger King, the domain, or not the domain because they didn't have the World Wide Web back then, but the name or the trademark was taken by a small shop. And so they couldn't use Burger King. And so he came up with Hungry Jack. And actually, apparently he didn't come up with Hungry Jack's because of his name, funnily enough. I don't remember the reason why they came up with Jack's. But anyway, so I spoke with Jack Cowan and, we were talking about businesses. And he said, Sam, I don't invest in small businesses. And I'm like, that's great. We've got this business here. It's not a small business. He's like, Sam, a business that's doing less than $50 million a year is a small business. And I'm like, the phone just went quiet. We paused for a second and I'm like, right. And still I'm trying to think, I'm like, $50 million is a big business. I'm like, this is a very big business. If you're doing $50 million, you're doing well. And he's like, Sam, if you're doing less than $50 million, it's too risky. I'm not going to put a single dollar into it. It's just too risky. He's like, for example, Sam, if somebody, if the operator of that business gets hit by a bus or dies or wife divorces them and wants to take half their equity, like I don't have control over that. If someone dies who's the main operator, who's the key man in that business, then everything is a disaster. I invest in medium and large businesses where the risk is distributed and it's not dependent on one person. And I thought that was incredibly fascinating. But what that does now for me is it goes, okay, if $50 million is a small business or just becoming a medium business, then $3 million isn't a big business per annum. $5 million isn't a big business per annum. $15 million isn't a big business per annum. And it just changes your perspective of what a big business is. And, I know people right now who run businesses, at $3, $4, $5 million a year, and they think it's a massive company. You know what I mean? They've got, five staff, do you know what I mean? And 3 of them are in the Philippines, and they think that's a massive company. And it just changes your perspective. And it's like, damn, it's like if we're not at 50 million, we got to get back to work. We got to get back on that horse, and we got to keep going. We got to keep whipping it. We got to keep moving forward. And so it changes the way you look at things. What it also does is when you hang out with billionaires and ultra successful people, it changes your understanding because you realize that they're just people. If someone's worth $1, if someone's worth $1 billion, they're still a human being. And what that does for me and what it does for you is it goes, if that's what I want to achieve, I can actually do that. It is actually possible. That's pretty meaningful because sometimes we pedestal people, and before we get the opportunity to meet them, we think that they're a unicorn when they're not. They're just real people. And it proves to us that it is possible. And we've just got to follow the blueprint on how to become that. And the beauty of this game is we're looking to get to a destination. And that destination is probably a similar destination than most people are looking to go to. But there's so many different routes we can take to get there. We play in an open market. There's realistically leagues, but you can play in any league if you want to. There's no age groups. There's no gender groups. It's free. Just get into the game and go, and whoever wins, wins. That's the beauty of capitalism, and that's the way the free world works so efficiently and productively. Alrighty, now lesson number 3. This is a really interesting lesson. I'm really keen to get into this one. So the primary difference between business in the 20th century, which is the 1900s, and business in the 21st century, which is the century we're in right now. This is something that I learnt, or rather realized more recently. I realized that most billionaires, and I say most, I'm going to get into the outliers in a second, but most billionaires and ultra high net worth successful multimillionaires who made most of their money or started their business journey in the 60s, 70s, 80s, 90s, or in the 20th century, they built their empire by maturing an industry. They matured an industry. So the industry was immature and they matured it. I'm going to go through some examples now, but an example is, I've used his name already, Jack Cowan. When Jack came to Australia, there weren't many fast food options. You could go and get Chinese, pretty much, and I think there might have been one or two other options, but pretty much he said that there were basically Chinese, and he told a story that he lined up out the front of his local Chinese, and there was like 20 people on the line, and it took like 40 minutes for them to get their takeaway. So it certainly wasn't fast food. And so the point here is he matured the fast food industry. He pioneered it, in fact, because it didn't even really exist. It barely existed. Another example is Glenn Richards. Glenn, I sat down with Glenn. Glenn was, our last icon on the show. And Glenn founded Green Cross Vets up in Townsville. And what Glenn did, the way he matured the veterinary hospital space, or the vet space, was he was the first person to really integrate multiple vets under one umbrella, under one kind of group. Before that, they were all mums and dads' businesses owned independently. And so the point here is he matured that industry and became a market leader in an industry which didn't have any market leaders at the time. Another example is Arthur Laundy. Arthur Laundy, who owns Laundy Hotels. He's a publican, right? So he owns pubs and hotels. Back when he started, there was no one leading the pub game. There'd be a few pubs on the corners and a couple people own them, and there were some families that owned more than one, but that industry hadn't matured. He matured that industry. Now, the point here is, in the 21st century, there aren't many industries that haven't matured yet. And it's really important to understand this, because when we're sitting down with these ultra successful business people and we're trying to learn the lessons from them, the way they built their wealth and their route to the destination is actually a little bit different to the route we've got to take, because they matured industries, whereas what we've got to do is we can't mature industries. Most industries are already mature. So we've got to disrupt via innovation. And I'm going to go through some examples here in different kind of sectors of back in the day, in the 20th century, when there was a business that matured the industry or pioneered it, versus now where there was another company in that same sector who disrupted the industry through innovation. A really good example on the topic of billionaires is anyone in the tech space. So obviously all tech billionaires, which I don't have the statistics on it, but I'd say billionaires created in the 21st century, I would say a very high percentage of them would be in the tech space. And that's because all tech is a disruption. Technology, literally the word technology, disrupts what existed previously. And so that's a really interesting point. But I'll run through a few examples here. So you're not going to mature manufacturing. You're not going to mature fashion. You're not going to mature food and beverage, healthcare, media. All those industries are already matured. So for example, fashion. Let's just take fashion as an example. I love R.M. Williams. I wear my R.M. Williams boots every day. I wear my R.M. Williams belt every day. R.M. Williams were established in 1932. They matured that industry of boots. They matured boots in Australia. Do you know what I mean? It's not like there were a number of boot companies that were, dominating the whole marketplace. It was a split market and they matured it. Comparatively to Culture Kings, as an example. Now, Culture Kings, originally they didn't manufacture their own clothing. They weren't clothing brands. They retailed clothing. But they innovated the industry. They disrupted the industry through innovation. And the main way they disrupted the industry was by innovating the buying experience. So when you go into a store, you have this incredible experience and this energy and this feeling. And Simon did an incredible job with that business because he created an environment where people wanted to buy and they wanted to be a part of the brand. And he knew how to leverage celebrities and celebrity marketing incredibly well as well. All of these different things is disruption of a space, being fashion retail, that had never been done like that before. And that's why his company, when he exited, was worth $600 million. So again, maturing versus disruption. I'll use another example. So again, back to Jack Cowan, Hungry Jack's. He matured fast food. Whereas Fishbowl, I love Fishbowl. Hungry Jack's, for example, were established in 1971. Fishbowl were established in 2016. Fishbowl aren't as big as Hungry Jack's, but they're doing incredibly well, and they disrupted through innovation. They didn't mature the industry. Healthcare, Green Cross and Pet Barn, they matured the space. So they were the first integrated pet business. So they obviously had the veterinary hospitals, which was Green Cross, and then they had Pet Barn, which was the retail component of the pet space. They matured that industry. A comparison point is they were established in 1994, whereas Crystal Dog Wash. If you've ever had your car cleaned in Sydney, you've got a car cleaning company called Crystal Car Clean or Crystal Car Wash. Funnily enough, our first startup was a mobile car cleaning company, and they were one of our primary competitors in Bondi. So we didn't like them back then. But anyway, times have moved on. We're okay with them now. Crystal Car Cleaning, they were founded back in like the 90s, I believe, but they started implementing the dog wash service in 2015, right? Now, arguably, the pet space has been matured. But what they did is they innovated because they realized that when people go and drop their car off to get clean, they may as well take their dog with them and get their dog cleaned or dog washed at the same time. So they innovated, or they disrupted the space through innovating the going and getting that service completed. Again, so just comparing, this is the thing that I've been learning recently, is you've got maturing markets versus disrupting markets. Another example is media. So Forbes were established in 1917 compared to Joe Rogan Experience. Joe Rogan started his podcast in 2009. Now, Joe Rogan is arguably far larger than Forbes. It depends on what metric you would use to determine that, but Joe Rogan is huge. He disrupted the media space through podcasts against traditional media like a magazine, which is Forbes. So again, not maturing, disrupting. And I think it's something to look at and to understand that we've got to go into marketplaces and disrupt as opposed to mature. And when we're hanging out with older gentlemen who've made all their money through maturing, we've just got to understand there's a slightly different route in the 21st century to become ultra successful in business. Cool. Alrighty, let's move on. Alrighty. Lesson number 4. One thing that I've realized recently from spending time with all of these successful people is every opportunity, there's a micro component to it and there's a macro component to it. I think most people only look at the micro. I'll explain what I mean by this. So a perfect example is Glenn Richards. So when Glenn bought his first veterinary hospital in Townsville, he could have looked at that business and gone, yep, look, the P&L makes sense in terms of that one hospital. I'm going to, look at the, what profit it's making. I'm going to put a multiple on that, and then I'm going to buy it for that multiple, which is the valuation. And then I'm going to try and double it, or I'm going to try and triple it. And that's a good business for my family and I. That would be looking at it micro only. But what Glenn did is he said, you know what? This entire space is due for a change. I could mature this entire market and I could actually dominate the entire country as far as veterinary hospitals. There isn't a strong enough succession plan for for vet owners. Succession plan in terms of if you've got a mum and a dad vet who own this shop and they're 70 years old, how do they leave? How do they sell? Who's going to buy them? And so Green Cross became effectively an M&A firm that just went around and started acquiring it. At their peak, they were acquiring 1 to 2 clinics every single month when they were a public company. And so Glenn, the reason he is who he is because he was able to look at the marketplace and go, that business stacks on its own, but what I actually want to do is I want to go and mature the entire industry. So there was the micro opportunity of the business unit itself that worked and it stacked, it financially stacked. And then there was also the macro market opportunity to dominate the entire space. And when you look at both of them, you don't become a billionaire or you don't make hundreds of millions of dollars by only looking at businesses as the micro unit. Another really good example is if you're in a business, and I've done this many times, two of our last 3 startups were software companies. And in a business, you're always trying to increase efficiencies. And an incredible way to increase efficiency is via code, which is software. And so a lot of the time business owners go, oh, I could increase an efficiency here. That'd be great to build a software. And so then they go and hire a team or outsource and build the software to solve the problem internally. That would be looking at it micro-wise. Yes, the investment I've got to make into that software stacks because I'm going to save X amount of dollars over time in my business. But at a macro level, I could then go and sell that software. I could white label that software and I could sell it to a bunch of other parallel businesses. So for example, you're not going to go and sell it to your competitors, but let's just take healthcare or allied health for an example. If you're a vet and you've got a software solution that increases an internal efficiency and you go and get it made and it stacks to go and spend the money to get it made because it increases the efficiency, which saves you money. A macro example of how you could look at that as an opportunity is then going and selling that software to doctors, selling the software to dentists, selling the software to physiotherapists and podiatrists and chiropractic. Do you know what I mean? And so you're not going to sell it to your competitors, but you're going to look at, Allied Health is an incredible example of that. You can look at parallel businesses that are the same business model as yours and have the same internal problems, so you can go and sell the software to them. And that software business might become even larger than your primary product or service or whatever you do. Very, very, very important way to look at it. Another example is pubs. If you go out and buy pubs, right? Pubs create cash flow. This is one of the reasons why Arthur Laundy is worth so much money, is because he actually owns the real estate underneath the pub. It's the same as the McDonald's story. The reason why McDonald's did so well is they sold the franchises, but they retained the real estate. And the franchisees actually leased the real estate off the owner of McDonald's or the franchisor. And the pubs are the same business, or the same example. So pubs are the cash flow, which is a bit of a micro opportunity. The business stacks in terms of making money, making profit, so you can draw dividends, which is why you're in business. But at a macro level, you can also own the real estate, which is then going to experience capital growth. And in Australia, real estate is the biggest opportunity that we have in this beautiful country, and it has been historically as well. And that's why so much wealth was created for people like Arthur Laundy. Micro, macro. So looking at opportunities, not just what's front and center, but what the opportunities are at scale and more macro as well. That's a massive one that I've learned recently, or that's been more kind of confirmed and instilled. Alrighty, lesson number 5. So the most important thing that stops you from falling flat on your face once you become wealthy. So this is a great example because it's the example of, okay, you might not be worth $500 million now, but when you're worth $1 billion or $300 million, how are you going to not let that get the better of you? In my experience, I'm not going to name names of people that are still alive because I don't want to cause problems and miss the opportunity to potentially interview them one day because they're interesting. But if you can think of people that are in this position, when you get a lot of money, unless you are humble and you're an avid learner, you're going to fall flat on your face. The most successful and most wealthiest people I know that I've been fortunate to meet are incredibly humble. It's quite interesting. You've kind of got, when you're young and you haven't got much, you're kind of humble, perhaps, I'd hope. And then you kind of make a bit of money. If you might make $10 million or you might make $50 million and your ego starts to go through the roof. You start buying cars, you start buying watches, you start doing all this sort of stuff. And then when you kind of get to $1 billion, you kind of just go, actually, I'm going to be a good guy again and I'm going to treat everybody the way that they should be treated. And potentially the way people get to the $1 billion typically is because they are that person. What I've experienced, and I'm grateful to have experienced this because I'm sure other people, when they meet really successful people, they might get the short straw and meet all the people that are dickheads and have got an ego through the roof. But what I always say is you've got to keep your ego fuel tank empty. And some of the most incredible men who are billionaires that I've met have made sure that their ego fuel tank is empty. And it's a really good reminder for all of us that are on the come up to make sure that stays that way whilst we're on the come up. A good example is this is actually not a brilliant example, but Jordan Belfort, right? Jordan Belfort, he did not keep his ego fuel tank empty. Joe Rogan's definitely worth more than Jordan Belfort now, and Joe Rogan's probably actually definitely worth more than Jordan Belfort was at his height, even if you index it to inflation. Joe Rogan is a humble guy. He has got his ego fuel tank empty, and that's why he will be a billionaire, and that's why Jordan Belfort won't. Now, Jordan, if he was here sitting with me, I'm sure he would admit the same thing. So I'm happy to say it. And who knows what, he might totally change and become a billionaire too. But so being humble and being an avid learner is a huge takeaway here. Avid learners, another example of this is Jack Cowan came along to one of our Forbes business summits. I kid you not, Jack literally, he got there before I did in the morning and he left after I did. He literally sat at the table that we had reserved for him with his wife next to him, and he had a pen and paper that we gave him, and he wrote notes the entire day from like before 9 till after 5. That's unbelievable. Now, again, anything he learns is not going to move the needle for him in his life at all, but it's such a big takeaway. You've got to be an avid learner. Another example is I saw when Jocko Willink, Jocko, he's one of my idols. I love Jocko. When Jocko Willink went on the Joe Rogan podcast, he took a notebook because he wanted to write notes. He wanted to write down lessons of the conversation that he was having with Joe. Like, have a think about that. Here's a guy who's a Navy SEAL officer, and he's brought a notepad to take notes of what he's going to learn from Joe. Again, avid learner, humble, ego fuel tank empty, huge. Alrighty, number 6. Let's keep rolling. This is big. So how I see billionaires and ultra high net worth people keep their family intact. Again, holistically speaking, money and business isn't everything. The biggest thing that I've learned is because business is all consuming, and so often it can feel like it's all that's going on in our life. At the beginning of this year, when we launched Early Bird, there was absolutely, for the first 6 months, nothing that I could even think about doing. Like, it was 5 hours, 4 or 5 hours of sleep per night. And it was just, everything was optimized around work. There were no time for dating. There was no time for cooking. There was no time for cleaning. There was no time for actually exercise, which is appalling. It was a full-on time. The 2 ways that I've seen ultra successful people ensure that their family stays intact is through communication with their spouse and their family, and the management of expectations. So both Andrew and Glenn, our last 2 icons of the series, both said that they effectively went into almost a contract with their wife, and they said, look, this is what I'm going to be doing. I could be anywhere in the country from Monday to Friday. I could be anywhere. But I promise you on a Friday night, I'm going to be home for dinner. I'll be home on Saturday and I'll be home on Sunday. And the wives and the family knew that that was the way it was going to be for a phase and for a period and for a sprint of that business or project. Cool. Alrighty. Now, wanting to get onto some practical and immediately implementable tips. These are a bunch of tips that I have accumulated over some time now. And most of the tips I have learnt, adjusted, or came up with from incredibly successful people that I've spent time with. Alrighty, tip number 1, how to stay focused and not get distracted with too much whilst in hypergrowth mode. How to stay focused and not get distracted with too much whilst in hypergrowth mode. So this is actually from Hormozy, and it's an absolute ripper. So what you've got to do is you've got to write down your top 10 priorities. Then you've got to cross out in priority order, right? You've got to cross out the bottom 5. Then you've got to basically circle the top 1, and the bottom 5 you drop. You just drop them, you throw them away. Number 2, 3, 4, and 5, you figure out what would be the least amount of time that you've got to spend on them to maintain and not fall behind on those particular priorities. So if you go to the gym, say gym is number 2 or gym is number 3 or jiu-jitsu is number 4, surfing is number 2, figure out how much time you need to spend on those things so that you don't fall behind on them, so that you don't get smaller if you're trying to put on size, or that you don't get overweight if you're trying to lean down. And then you spend every other waking moment on the number 1 priority thing. Now, you can adjust your priorities as often as you want, every quarter or every year, but Hormozy reckons that's the best way to stay focused. It's something that I've implemented. For me, business is at the top right now. Business is my primary focus, then health, and then relationships. It doesn't mean that I neglect my relationships or neglect my health, but it means, is Sam Hope as a single man going to go on 10 dates this week? Is Sam as a single man going to do 3 jiu-jitsu sessions, 4 in the gym, go for a surf twice, and go for 3 runs? No. He's going to maintain relationships. He's going to maintain his health. But ultimately, he's spending every waking moment on business, because wealth creation and success in the sport that he loves being business is my primary focus. Alrighty, I'm going to breeze through these last ones because we do not have much time, unfortunately. So tip number 2. My approach to deciding what to do when you're young or earlier in on the journey. So my number 1 tip for this is do things to learn instead of doing things to earn. So this is relevant when you're in business, but it's kind of almost more important when you're in a job. So often, the proverbial job is often looked quite negatively in the entrepreneurial space because everybody wants to run a business, but you can learn a lot from working a job. I've worked for, my first job when I was 17 years old when I moved out of home was for an events company, and I worked in sales for them. I learned how to sell on the phone. My second job after a business in between was a global software company. I got to go to Canada, learn how a $14 billion company operates, all the way they do all of their procedures, their SOPs, their operations. I learned so much. The reason I did worked for those 2 companies wasn't because I was making a whole lot of money. It was okay. It was because I was learning. I went into those companies. I learnt a bunch. The trick is though, when your learning curve starts to plateau, that's when you've got to leave. Don't leave. It's really because the thing is, it changes and this is again advice to entrepreneurs, but it changes your ethos, because you're getting a salary every fortnight, which is not why you should be doing anything. As a business person, you need to be out hunting. Do you think like the hunters back in the day, they just got given a hind quarter of a lion every single fortnight? No, they had to go and hunt a full lion whenever they needed to eat, right? Now, they're probably not eating lion, but you get the idea. So you don't want to get stuck in a salary. So the point when you leave the job is when your learning curve starts to plateau. Alrighty, tip number 3. This is a mental ritual to keep your vision and belief clear. It's called the $50 million exercise. So the $50 million exercise is one that I learned from a really close mentor of mine, Michael Lane, who's actually the CEO of Forbes Australia. Michael used to talk about this one, and I spent a lot of time doing the $50 million exercise. What it is you basically pull out a sheet of paper or a spreadsheet. I use a spreadsheet. Michael always said just to do it old-fashioned way and pull out a sheet of paper. But you write $50 million at the top. And then you're pretending what you would do if you had $50 million in the bank, how you'd spend that money. What I would then go and do, and this is what you would go and do, is you would write down exactly what you'd spend it on. And you'd go through and you'd spend all the money and all the things. You'd buy the cars, the watches, you'd buy the house, a few investments, a few things for fun. You get to a point where the money, you've spent 10 or 20 million and you've still got $30 million left. And you go, what actually is important in life? And it actually makes you think about what's important and what you do if you had a strong capital base. And it's an incredible way to first throw yourself into the future, so you understand what it's going to be like, and it's quite euphoric. It can really be inspiring, and it can pull you out of a difficult period. But also, it shows you what's really important, and you can go back and kind of go, okay, well, I've bought everything that I want to buy there. Maybe I don't need $50 million. Maybe I'm a $10 million guy. Maybe you spend the whole $50 million and you go, I'm a $1 billion guy. It's a really cool exercise and you'll learn a lot from doing it. Alrighty, guys. Now, that is all we have time for in this episode because I've got to run to my next meeting. But thank you all for tuning in. I hope you got some value from that. I hope you enjoyed our special intermission of the series of world-class voices. We have some incredible Australian icons to come. I absolutely cannot wait to unveil them and to let you know who they are. So just stay tuned until we release them. It's there's some very exciting weeks coming up. This is all we have time for today. But enjoy this and re-watch this and listen over this again, because again, I'm not here to preach. I'm not here to educate. I'm the conduit between incredibly successful people and you guys who are tuning in and listening to learn. I'm connecting lessons from billionaires and ultra high net worth and successful business people and high performers all around the world to you guys, so you guys can learn all of the rituals and the patterns and the habits that have made them successful. I'm the conduit of information. So I hope you enjoyed that. I hope you got some value, and I will see you next week. Cheers.